Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, March 16th, 2022. It was a very, very interesting day again in the markets. The power of the money coming into the market was astounding to me. It was very interesting to me, basically because I felt that it was all premised on some unknown information. And the only thing that was that came out that was perceived to be correct was that the Fed only raised the rate 25 basis points to 50 basis points, depending, I guess, on which rate they were talking about. And outside of that, this astounding pile-in of money is just crazy, but it is very fitting in the type of wave that we're in, the characteristics of that wave. And so I want to quickly just go over a couple of things before I detail a little bit more about mindsets. And the first thing I want to do is to say that I have changed the labeling. And the reason that I changed the change for the labeling is due to the fact that the market did here in the S&P go above the 43.26 level, 43.27 to be exact. And as I had stated previously, once that occurred, it would shift the minute wave 2 up higher, not necessarily change the overall structure or change what I think is still coming, but it does change the very near term picture in terms of that this C wave is really got some power behind it. But characteristically, that's exactly what it should do. Now, so what we've done, the minute wave 1 stays in place with the low at 41.38. Then we had the A wave and the B wave, subminute, because we're looking for a minute wave 2. So subminute A and B, we're in the subminute C wave. So these actually should be a different color. But it is coming up. We have wave 1, 2, 3, this is 4, and the 5th wave. Now, could the 5th wave be over? It could, but we're not getting that indication, A, because we're in the start of the Goldbeck session. So I'm still good, the jury is still out. What we need to allow for here is for an additional rise and hitting that resistance at 43.73. Now, we can get up to 4401, 4402, but what the market can't do, unless we're going to change the count yet again, and I'll go over that in a minute, it can't go above 44.19. If it breaks 44.19, it redoes the count one more time, and it puts an additional alternate view into place. So this was alternate view number 1. Now I'm going to tell you alternate view number 2, and that would come into place if the market breaks 44.19 and keeps on going. Now, go out to the 4-hour chart. What we actually have labeled thus far is we're coming off the all-time highs, and I have been labeling it as, and continue to right now, as an intermediate 5-wave decline to form primary wave A. Now, what it could change to, and again, that would suggest that we're going to get a break above 44.19. Then it puts this into a little bit different perspective in that this becomes intermediate wave A. This becomes intermediate wave B, and this 5-wave decline becomes intermediate wave C, and that primary A gets labeled underneath this. And that changes this to primary wave A, this to, intermediate wave A, this to intermediate wave B, and we are now following through with an intermediate C wave advance, which could take us back above 45.85 and up, actually towards 48.08, and it still can be a B wave. In fact, it can go above 48.08 and still be a B wave and still result in a bone crushing, bank account crushing, brokerage account crushing decline. It would be a crash if we got up there. We still may get a crash, but if it went up there, it would still be a B wave. And even if it went above, it's an irregular B wave. And right now, because of how this is panning out, I would not suspect that that B wave could get up there. It may get above here, and that'll change all this labeling and get maybe up to 46, 4,700, and then die once again. Now, that's an alternate. A lot has to happen prior to that coming into play. But we saw an incredibly strong rally today, where even after hours, the S&P was up over 100 points. Now, that all came on the heels of the Fed only raising a quarter to 50 cents or 50 basis points. And that initially drew a negative reaction. And the market dropped, 43.07 dropped all the way down to 42.42. So it basically dropped 60 bucks and then absolutely rallied back. And in the last hour of trading, went from 42.88, we'll call it, to 43.51. So it rallied $80. So it rallied the 60 that it gave plus the 80, and then continued in the after hours, reaching 43.67 before pulling back a little bit as the start of Globex. Now, what can we expect? Again, tomorrow, I think we can expect, not necessarily going to get, but we can expect an additional rally. 43.73 is our next resistance, and then 44.01. I am looking for these levels to contain and then complete a minute degree. Starting to go above those areas is going to push it to an extreme. And actually, wave C would equal 1.618 of wave A up here. That's not very common. Not impossible, but not common. The most common is 0.618, and the next is 100%, and it's exceeded both of those. So we give it the 1.236 and the 1.382. So I'm expecting, if it is a minute wave 2, that's where it should stop. If it starts going above, we're drawing into the picture the alternate view that I just kind of laid out. Now, I want to fill in some blanks here. What is really happening, folks, is the current situation. As much as the market is really hoping that it's all over and we're on to the road of great success again, nothing has changed. The only thing is that the Fed didn't raise it a point, but they're still intending to raise 2 or 3 or 4 or 5 additional times this year. This is just the first. And whether we're really going to believe that this is going to stop inflation in its heels is a misnomer. It's not going to happen. There's going to be additional. They may get a start on this, but actually we have, in my opinion, a very weak Fed. They don't have the guts to just really put the brakes on it and stop it, because they know what it'll do to the economy, and it'll throw the United States into a recession. And likely it'll form a global recession, and they don't want to be responsible. But I'm telling you, if they don't, it's going to happen anyway. So inflation remains pretty strong. We'll see how big of a dent they can put in it by their minuscule raising of rates here, how that will slow down either the stimulus, which is called printing money, jamming it into the system, if that actually slows down. We don't know yet. Now, the Ukrainian situation is not improved. There was rumors this morning, or actually it actually was supposed to happen, about that the Ukrainians and the Russians were going to sit down for a neutralization discussion. How we can neutralize the Ukraine and stop the war. Well, Ukrainian Zelensky, he came to the United States via Zoom and talked to our Congress. He didn't mention once about this. In fact, he denied and said it wasn't going to happen. Now, So that situation is actually getting worse. And what we're seeing the Russian military do on a humanitarian level is disgusting. Now, that still remains. Inflation still remains. This notion that, well, you know, crude dropped from 130 down to 95. Well, it's really coming down, so inflation's got to lessen up. Really? It's trading at 96. Inflation remains. Commodity prices are not dropping. Inflation remains. Go to the grocery store. Are they lowering the prices? Inflation remains. Granted, it takes time for this to filter through, but it's not going to filter very far when you're only raising the rates a quarter of a point. Now, what does that mean for the market? That I think for this thing to turn, and when it does turn, as I said last night, when it does turn, it is going to turn as if the market just got a right hook to the jaw, got knocked down to the canvas, and they're trying to stand up but can't, because the sellers are going to come in and they're going to break the 4, the 8, the 20, the 50, the 200, all on the hourly charts. We're now above the dailies. So it continues to paint a rosy picture for our market. It got above and closed above the daily 20. That's positive. That's a positive for the market. That's why I continue to look. If it starts getting above 44.01 and then again above 44.17, it's breaking the 50 and the 200. That on a daily scale would be a positive for the market and force likely a rethink on how high we're going to go. Now, what I want to add to all of this, we're getting the signals. That doesn't mean that I'm wrong or anybody else is wrong or your positions are wrong. What needs to happen is we got to go with the flow as the market goes with the flow. What I will say, today was an awesome trading day. It was a very profitable day. And not because I got stuck on a position, but because I rechanged. I went with what the market was doing. I was reading the price action and I followed along with what was happening in front of me. My concentration was not on, oh, what the Fed's going to do, or gee, what's going on in the Ukraine. It was on the price action. So your mindset has to be strong that exterior noise is left on the outside until you can go and deal with it. So in other words, it's like, I knew what my count was. I know what my expectations are, but I'm still going to trade what's in front of me because my objective is to go in and to earn money each day. Not necessarily put on a position and wait and go like, oh, it's really, really working against me. Do I want to change my position? Oh, gee, I don't know, it's going to come back. But, you know, that is wishful thinking. Trading involves activity. It trades, you must be actively involved in what you are doing. And you can't turn and blame somebody else for what's happening or not happening. So again, keeping a mindset is going to be very, very strong. Paying attention to what's trading in front of you. We'll look at it afterwards and we'll put together an upside and a downside scenario and what to expect if each one's going to pan out. If a downside scenario is going to pan out now, well, I'm going to tell you, it's got to go and not stop. So buyers will get annihilated every time they try to come in. They'll get run over and it'll drop and it'll drop and it'll drop. There'll be a quick bounce, but it'll drop and it drops and it drops. Just like today, little decline, they were right there to pick it up. They were right there to pick it up again and again and again. The opposite will happen to the downside. Now I think are getting close to a top if indeed we're completing a minute 2. Otherwise, we're in likely a much larger move called an intermediate B wave. And that would be then completing, an intermediate C wave to complete a primary B wave. That's a big move. And it may take longer than what I'm thinking here. So play accordingly. If you're running downside positions, hopefully they're on defined risk. If you're just straight out there with long puts, well, you only can lose what you paid for the put. That's not so bad. That's a little bit defined. But if you're short a future, just being short, or you're short a call, you're going to get killed, because if you haven't already. The volatility is incredibly strong. So selling premium is still a good strategy, but learn how to do it. Now, for tomorrow, again, right now I'm expecting follow through, but we'll see what happens. When Asia opens and then, Europe opens. And there are going to be developments in the Ukraine. There are going to be developments everywhere that see what actually comes out. So trade smart, folks. Trade what the moving averages are telling you. Right now, the hourly, it is lined up. 50, there's the 200, the 50, the 20, the 8, the 4, all pointing higher. In fact, the 50 is pointing strongly higher. So this thing has to turn and fly lower to kick these moving averages out of their position. That's what has to happen. Otherwise, we will continue to go up. Why? Because they come in and they see that. If you're technically trading, it's telling you to buy it. So I'm going to leave it there. Please consider the mindset. If you're having problems and you need some little bit of help or just being able to day trade, please consider the trade room. I do this every day. I'm looking at the price action. Does that mean I don't get caught in things? Absolutely not. I do. But you got to know when to cut it off and change your mind and change into what the market is actually telling you. So there's the trade room. I also offer coaching. These are things that really can be used to your advantage. Again, get in contact with me if you need some help. Next update will be on Thursday, the 17th.